forexbrokers.net, and we are still on the videos dedicated to one single article, the oscillators, an introduction to the most important ones. This time we'll cover the CCI, one of the most common or popular oscillator. It was developed well ahead of its time, or not ahead of its time, but ahead of the currency market. It was developed on commodity markets. The CCI comes from the commodity channel index, and it has two values, 100 and the minus 100. Also, it has a zero level with the default settings. And the key when trading with the CCI, the standard interpretation, is that the 100 and the minus 100 represent overbought and oversold levels. You already know the concept from the RSI. Now, the catch here is that each currency pair that you see on the dashboard has its own volatility levels, has their own average true range in time, and so on. So some currency pairs reach the overbought above 100 easily. Some currency pairs have a problem reaching those levels that easy, and so on and so forth. What I'm trying to say is that the CCI reaches these levels quite easily, quite fast on any market turn, and they go even to extremes. For instance, this is 194 or even minus 292 on not much of a market move, as you can see here. So if you trade the standard interpretation with the CCI, imagine that you sold here, you look at the price, right? I point to the overbought and you look at the price, selling here, buying here, selling here, selling here, buying here, selling here, buying here. Sometimes it works, right? But sometimes it simply doesn't work, and sometimes it lags. Imagine you go here, this would be okay, but this is a ranging market. On a trending market, the CCI spends a lot of time above or beyond 100 or minus 100. The key here to solve this is, of course, to use overbought and oversold levels, but not the normal ones, extreme ones. And to do that, what we gotta do is to edit the oscillator, namely right click, indicators list, commodity channel index, edit, or simply when you add the commodity on the chart, then you can edit it. Regarding the number of periods, this one also considers 14 days, 14 periods, but the 14 periods refer to the time frame. So in this case, 14 days. It could be weeks, it could be months, hours, minutes, it depends. The more periods the oscillators considers, the flatter it becomes, and the more difficult it is to reach overbought and oversold levels. But it was intended to be used with 14 periods, so for best results, make sure you leave it to 14. Now, if we look at the levels and we try to edit the levels, these are the levels that come with the default settings. We add the 255 and the minus 255. You can change the color if you want, and if you apply those levels on the screen, the CCI appears like this. Now the CCI, as you can see, in this case, when it reaches extreme overbought or extreme oversold, it doesn't reach those levels that easily. In other words, if we had plenty of good signals on 100 minus 100, it means that the ratio of good trades when compared with bad trades will increase significantly if we use extreme overbought and extreme oversold. Take a look here. The market goes and reaches, with this move lower, reaches minus 250, extreme oversold. So not only 100. So what do we get in exchange of using extreme overbought? We get better entries. And then simply going on the long side on extreme overbought, again, when and only after the period closes, so the oscillator actually prints below it, if you see a pullback in price, the CCI won't be extremely oversold anymore. And then to close when? To close when the market goes into the original opposite overbought in this case. So buy extreme oversold, close in or classic overbought. Or sell extreme overbought and close or square the position in classic oversold. This is the best way to trade with the CCI using the traditional interpretation. As you can see, with each oscillator there are some tricks and tips and tricks to edit the oscillator to make the most out of it. The beauty part of trading with these oscillators is that the principles and the ideas presented here, they work on all the time frames and all the currency pairs. So there is always one trade to be taken if the trader does his or her homeworks. Good. Next we will deal with the Markov indicator oscillator and a couple of oscillators more in order to finish oscillators and the introduction to the most important ones. Bye bye.